Hello. Hey Ted, how are you? Oh, come on. Good afternoon. Good afternoon. How you doing? Hello, hello. Oh man, I'm trying to use this window, make it small here. Okay, there we go. All right. So how's everything going? Slow. Market is slow. Waiting for tomorrow NFP, man. And but still there. There are little moves, right? Your USD went down. I have a short on that running right now, and a few others. So, any one of you got anything with us today? Um, Bad numbers came out, very bad numbers for quick 30 pip. Okay, good, Ted, very good. This morning, unemployment, man, that's like historical. That's never in the US history, I think. It was, like that. More than 10 million now in 2 weeks filed for unemployment. Amazing. Uh, I don't know. It's very dangerous, man. Very dangerous. I mean, this is something that is going to change the history of the world. Well, not the history, actually. The current situation of the world. Right? We're gonna have totally different world, and after a few months. Hey, John, how are you? Anyway, you gotta live through that. Yeah. Whatever we have in front of us, we have to face. All right. So, yeah, I rather I change the topic of the webinar. It's just like, okay, let me just make it, instead of me just blah 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 all the time, let's hear what you have in your mind, the question answer session. Like, any questions you have, throw at me so I can start, uh, you clear things up for you. Hey, Sayed, how are you? So, any question, Arthur? Everything is fine, Patrick? About anything at all. Okay, so let's hear some questions now. Sayed, any question? Okay, and okay, all right. Oh, we got a lot of questions here. Okay, okay, very good, Patrick. Very good. Keep it up. Keep it up. No, Sayed, you're wrong. I have a bunch of questions right here, right now. I'm just reading one by one, and then I can start. Okay, all right. So let's start from the top. Um, Arthur wants to know, the recent example of an example of a recent trade. Okay, so it's a bunch of examples there. All of those trades are examples, but the approach is what you want to do is that what is the approach? And I have a video, and I'll send out to you, Arthur, later on, that how you start, how to begin your trading day. So once you are in front of the computer, what do you do now, right? You look for what? So you already have decided that these are the pairs that I'm going to trade. If you look at the 20 or 30 pairs that you're going to lose, definitely. No one has that powerful mind. We aren't Einstein here, right? So, So what we do is that we're gonna divide the focus in so many different things, and then that's the biggest mistake a lot of people do is like trying to trade forex and then indices and then metals, the gold, the silver. You look at the so many things and so many levels and trend lines, they mix together, and then you forget everything what you saw. Right? You spend 2 hours, and after the end of the day, at the end of the tunnel, should I say, that you don't know what to do because you saw so many things, and now you're confused. So if we already decided that pound pairs right now are moving good, Euro Aussie, Pound Aussie, right? Pound CAD, Pound NUSI, these pairs are really, really Pound Yen. They're moving big, good, and they give you so many entries. So if you start to look into those pairs only and make a profile, like I already showed you that, how you make a profile, so you can see all 4 or 5 pairs at the same time. You make that, and at the time of the news, for example, Arthur, let's go back and then remember I showed you. Let me see if I can for Euro. Okay, let's go Euro Aussie, for example. Okay, well, we have a news here. What the heck happened here? Euro Aussie went up. No, it's not current chart here. Let me see if okay. For example, uh, let me see, where was the trade? I forgot, man. Which one was it? It's moving so much. Everything is moving so up and down and up and down. So I'm kind of Arthur, the one you you had a question before. I think there was Pound Nosy, right? Let's go take a look at that Pound Nosy, okay, and then we'll go from there. For example, Pound Nosy. Remember, the other day I showed you that we had a very bad news for New Zealand dollar, right? And obviously, right after that, what do you expect from if you have, like, for example, tomorrow is a NFP is coming, right? And we already know the number is going to be very bad, right? I mean, come on, just today the news came out in the 10,000. I mean, 10 million in 2 weeks unemployment filed, right? So things are very, very bad, and NFP obviously, we're gonna have job loss there. So what's gonna happen? USD is gonna get hurt, even though right now the USD, even after 10 million in 2 weeks unemployment filed, the USD is getting strong. It's just finishing the wave 4, by the way, and getting ready to drop tomorrow. So now here, after that, pound Nosy, and I don't know. There was my trade was somewhere. Let me see. Let me go. There was so many things that I kind of forget what I did. What was the trade? I think this was the one, right? Okay, this is the one, and it was on the 31st, right? Okay, so it was like right after that, 31st, 7 o'clock. So let's go take a look at the Pound Nosy 31st and 7 o'clock. No, this is 40 minutes. What am I doing on a 40 minute? Okay, at 7 o'clock. That was right there, right? Now your thing is that once you decide that, okay, then in the morning you sit in front of your computer that want to trade, and you go through all the pairs, and then what you do, the first thing is that you take the weekly chart, Pound Nosy, and then you see all these numbers here, right? So wherever you are, very close by, for example, you see that yourself bouncing from the TL, let's say, right? For example, and you are right here, the TL. So the chances are either you're going to break the TL and drop. Where you drop right there underneath, this is a big number, 98.45, right? That would be the target because you're just dropping. Or if you bounce from the TL, for example, then maybe you are sitting at the TL as well as 0016. And then if you bounce from there, so you are above this 98.38, 36, right? So you don't worry about that. But 98.36 and 98.45, that's what you already draw that number. Plus you have, if you are above this 0016, then where the heck you gonna go? So maybe up here, maybe this high. I don't know why I don't have it here marked, but always have these highs and lows marked. Very, very important, right? And then you come here and then you see that there's no number here. Okay, and then what else here? You have this one, you have this one, you have this one probably, right? All of these numbers from the weekly chart, you take it and then you go on your 40-minute chart and then you draw those horizontal white lines here like that. So 0322 is right there. This is, and 0418 is there. This is my 40-minute chart. Why it's stuck here. And this is 0470. Let's find out where the 0470 and 0558 are. Okay, so 0470. Can anybody help me? 0418 I see here. Or 0470 is this big biggie here, right there, right? These two big numbers, right? So you bouncing from the TL, right? So the first target would be, obviously you'll see that you're gonna go to 0470, and then what the heck is this one here? 0416, right? So 0416, I'm just gonna mark here, small number. 0416, right? And then you have 0470, and then nothing but 0558. So if you mark these numbers on a 40-minute chart and a 20-minute chart, and you are sitting there, and then you look around, any harmonic patterns, Elliott wave, this and that. But the key to move the market is, we all know that it's funny, the news. When the news comes out, this is 0489. I don't know where the heck I got that one. Maybe there isn't a number, but 0470 is the big one right now. So we're going to change that to that and see what happens. 0470, right? So where is it? Right there, right? And 0558. So this is where the game started, actually. So the news came out on the 31st. I don't know what time, but so before that it was like this, right? Pound is weak, and then Newsy is like maybe not doing anything or getting strong a little bit, whatever, right? But all of a sudden you have a news, and that's very bad for Newsy dollar. So what happened is that Newsy dollar started getting weaker, and all the pairs where the Newsy dollar is on the right hand side will start to go up, right? So you're watching at that time around the news. At that time, what do you watch? You watch the pairs involve Newsy, like Newsy yen, right? And pound Newsy and euro Newsy, all of those Newsy, Kiwi dollar, whatever you call it. You open that profile, and then you start watching the pairs. What are they doing? So it was sitting here, and then it bounced, and it bounced, and start to bouncing, going up, right? But here you cannot go long because we have rules to go long. The Newsy dollar, bad news, is going to get weaker, and we understand now that pound Newsy may go up, right? It may go down. But what do we see here? Is it going down? No, it is bouncing from, it's trying to go to the upside, and then start making little higher highs on a 20-minute chart. And then our rule kicks in. What is the rule? The rule is that yellow has to be going above the black. If it is going to go down, will that happen? Would you see yellow above the black? I don't think so, right? You're not going to see that. So what are you going to see? Yeah. I'm tired, Joey. Don't worry about it. Okay. Okay. Oh, my questionnaire pan just got messed up. Okay. Let me just. Okay. Okay. Now, all right. No problem. So. All right, so let's continue. So bouncing from here, right? And then with the news, pairs start to move in that direction, so you wait for your setup, and you could be thinking wrong, right? You start thinking that the bad news and the news is going to get weaker and pound news should go up, right? But it starts dropping. So but the thing is that it is sitting at a nice big support. You know that this 0470 is a big support. It's right there. It's a big number, right? This is a big number, big area, this one and this one, right? And this one. So you are sitting at that very big number, and right underneath that, you have a TL from where you are actually bouncing. You were bouncing from the TL and then going up. So the next is, then you actually you went up here somewhere, right? And then start dropping back to that number 470, and then not going down, but after the news, you start to go up and the things start to turn to the upside. So if you can catch, if you are watching ahead of time, ahead of news, I guess, right? So you will be prepared yourself, right? And you will be watching, and then especially if you have an alarm in place, right? Then definitely your alarm will beep here and here and here, right? So these are the places that the alarm will be beeping. That is one thing that will give you a big head start, and then from there, look, it's a clear entry here. So now your analysis with the pound yen is that you're watching before the news what's happening, and then you most of the time you have some kind of news. If you do not have a news, then the previous day news will prevail. For example, previous day the news came out bad for pound, and pound started getting weaker. But the following day there is no news for pound, but pound will still keep going down, 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 because there is no news to make the turn, for it to make the turn. So people will take the previous day news as the current news, and it will continue going down unless you have some reason, somebody comes out and talk about something that, oh yeah, we're gonna do some easing and this and that, and then pound get a little bit boost, or maybe interest rate change or whatever, right? But we have to have a fundy to make change in the direction, just like here. Newsy was coming down, all of a sudden very bad news and direction change, and you immediately start getting the entries if you watch. And the key is that always keep your 20-minute chart. 7-minute chart is more frequently, but even still 20-minute chart, at least every 15-20 minutes, refresh your 5-minute chart, see the proper correct entries, and you will see more entries there. So this one was an entry that I took. Remember that, Arthur? And then and this is why another reason that I choose this one to to explain things, that I know you took or Adam is the one, I think. Yeah, Adam, I don't know, he maybe his timing or something is off with us doing the webinar, so he's not usually. So he sent me a chart that he took this entry, and I think where is the chart here? I forgot which one. Anyway, so he took this one, right? And this one both are very, very nice entries, right? Yeah, okay. For Arthur, I forgot. You the one, but you asked me about this entry, right? And I took this one, and Adam took this one, right? So yeah, we both took these two entries, came in, and then I took it, and then I took a few more in pound nosy. So this is the setup, and this is these are the steps. Step 1, step 2, step 3. Take the weekly charts, look at the weekly chart and the monthly, and the important numbers wherever the price is at that time. Not all the numbers I'm talking about, 50, 60 numbers. No, only few to the downside of the price, and few numbers to the top for the target. If it goes down, where the heck we are going, so you can know exactly, okay, this is going below this number, then the next number is 0416. We just marked that number, right? So that would be the next number to the downside, which will be probably it is marked here, okay, 0418. So that's what it is. If it would drop from there, right, a short, let's say for this, for example, this short here, you can say that this is a short entry. If it will play out, it will drop to this number. And but the thing is that the news is very bad for newsies, so dropping that pair is out of the question. And even if it is going to the downside, then you can take that entry, but you have to be very careful and take that at least that big support out of the way, which is not the case here. We have this support acting strong and start to push the pair to the upside where the news was directing, right? And in the direction of the news, it goes, and we go behind it. That's it. Very simple. So every time you have something like tomorrow, what is it? NFP. Let's go and let me just show you what is happening, what you can look for. Oh, come on. I don't know why my internet is slow. Everything is messed up nowadays, right? For example, what's the big news tomorrow? NFP, right? Now, this was the chart I made. You all know that, right? When we were here, I said we may drop here and then go up, or right from there, we will go up for wave 4. And very classic way, we are going to the upside in 3 waves, A, B, and now C. 38% is right there. It may go, may not, because the 38% of this whole drop, it's the rise here, right, is also there. So it's acting right now and giving us resistance. 1026 number is right there. So basically we have 1, 2, 3, and I said we have 4, we're going to go. So in slow days, we went up. Obviously, tomorrow, hopefully, right, if I'm right, that my plan and my thinking, if you want to know that, I know that what are the condition of the world and USA already. We all know that. So, and the numbers are already, unemployment today, 10 million in 2 weeks. Obviously, the NFP number is going to come out very bad. And when the bad number comes out, the USD drop, the USD get weaker. So the US dollar index would be dropping, right? So now we know, we already planned and everything, and we looked at it, and for weeks ahead, wave 1, wave 2, wave 3, wave 4, followed by what? Let me show you. If you, so you keep track of things like that, you can't go wrong. No, no. Well, the thing is, right now, Cloud, you need to know. You probably know that already, but what happened is that this market has so many things that we forget things, right? See that this stock exchange is controlled by a Chicago Mercantile, right? That's it's a body that controls and governs that whole market, and then it's a lot of market making over there, and then people uh, uh, like inside trading and stuff like that, right? Fraud, in a simple word, can happen. So they have that body that govern the whole market, the stock market we're talking about. But in this forex market is not controlled by either that body or anybody else. It is not. It's a free, open market. And really, there's nobody to control, or nobody can play any game. Yeah, the thing is, the only game is like the powerful wins the game, right? Simple as that. Uh, so the weaker goes home. So what happened is the big boys who have big money, right? So they get together, they talk, so let's take this thing to the upside. And they have like one have 500 million, the other have 800 million. And they are going to the long, right? Long side. It doesn't matter what the chart's saying, that the price will go up. You know what I'm saying? It doesn't matter what the news is. So, but they cannot like market making kind of thing. We cannot say it, but the thing is that we are bound to follow them. They can move the market. If they put a lot of money, yeah. So now they can think like this. That, for example, let's bring the price up a little bit, right? We call it accumulation. Okay, so they start slowly buying, so the price slowly goes up, 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 and then what happens is that when we see that price is going up, then they also buys, but small amounts, and the price will go all the way up. But their main intention is to sell the damn thing later on. That's what it is. So, but the thing is that if they sell in the bottom, they're not going to make anything. So what they do is that they will raise the price first by buying it. But you're not defrauding us, but literally they're putting their money and they're going to accumulate and they're going to buy and then the price will go up. So the market is always real. It's just that they think like that and they play the game, like that. But not too many games can be played in forex market. So if you really understand this mumbo jumbo, which I teach right all the time here, the support and resistance, you can't go wrong. You have to be right all the time. The only way you can go is the right way. So what I was showing you here is that, for example, this phenomena here, this Elliott wave, if you look at it, that if we know that this is what happens, right? Well, actually, I have to show you the upside down kind of thing if I have it here. Ay, ay, ay. Seriously? It has to be here. Hold on just a minute. I messed up. Okay. It's small. Where's the big one then? Oh, what the heck, a small one. All right, here. So see, this is, well, here I'm showing a flat correction here in wave 4, but it's still same thing. With the see 1, 2, 3, and then wave 4 has 3 waves, A, B, C, sometimes flat correction, sometimes zigzag, not zigzag, but irregular correction. So A, B, and the 4 goes around 38%. Wave, see, it's written here, wave 4 equal 38% of wave 3. And then after that, what happens? This happens. So we are already anticipating that this is what's going to happen. This should happen, right? If the Elliott wave count. So you can see here clearly that after this big move from the bottom, right, 5 waves to the upside, and then there was A, B, or 1, 2, maybe, anything can happen, but the phenomena is the same thing. So we had wave 1, wave 2, and then this wave, it was pretty big, so I call it like, more like it's a 3, wave 3 instead of C. And then I said, okay, maybe C, but let's see what happens. And then it should be like 4 or 1. But the way it is going to the upside, it's clearly wave 4, right? It's very shallow. It's it's very wobbly and slow. So this is the characteristic of wave 4, not wave 1. Wave 1 is impulse wave, and it usually goes fast like this one, right? It drops big, fast, not like that. So this is wave 4 clearly. So after wave 4 is finishing around 38%, we already know, and we saw the diagram that, okay, this is what happened. Oops, where it is, okay. Now you can see, right? Yeah, okay. So that was too big. So 1, 2, 3, ABC correction, 38%. After that, it should drop, right? So what will happen tomorrow? Obviously, we already know that's what's going to happen. Now, if you go and look at the pairs, what the pair is going to be doing, right? We understand the whole, drama is going to be unfolding this way, probably 80% of chances, 20%, God knows what happens, right? But 80%, 90% that this is what's going to happen. This 61% retracement will fulfill the story here, and the wave 5 is going to drop all the way into this area, and then whatever happens. So, and that can happen only when the bad news comes out for US dollar, and which we are anticipating that the number is going to come out bad and the US is going to drop. US is going to drop, US is going to get weaker, USD, right? And then what will happen to the pairs? For example, Euro USD, Pound USD, right? So Pound USD, for example, is going to get weaker. Pound USD is going to get weaker. USD is on the right hand side, so Pound USD should be going to the upside, right? Sell USD, all right, of course. Every pair, what do? You sell one currency and buy the other. So in Pound USD, you're going to sell what? USD and buy Pound, right? That's what it is. And that pair goes to the upside. Okay, so let's go take a look at the Pound USD, what Pound USD is going to be doing, or it is doing right now. This is, you can say the same question. I'm going on and on and on, but it's a good question, and then it's a lot of things to clear out. Okay, forget it. So this is the chart I made when we were here at the top of this wave 3. remember? And I said we're going to be dropping for wave 4. So wave 4, like just like USD, what the USD is doing right now, wave 4, complex, very shallow, wobbly, right? So that is reflecting here as well, right? Oh man, I gotta shut this thing up. Hold on just a minute, guys. Pound USD 33 minute. Okay. Pound USD 33 minute. Shut the hell up. Okay, okay. All right. Okay, so let me just turn this off. Okay, so now we know that the same thing is happening here. So USD was getting strong a little bit down here, then it started weak, and now if that tomorrow, right, if USD start getting weaker, what will happen? If it doesn't come down here today, right, then that's it. That means that this is wave 4, and now we are wobbling here, but slowly here, and then right from here, and if it comes, USD gets weaker, and poof, to the upside. It's going to be going to the upside. So what do we need to do? In this one, I have the level here, 1957 only, right? Oh, no, here, 2194. But what is more to the upside? What are the levels? Can anybody give me a number to draw here? Any next number, for example, in pound USD. Let's, you guys need to do something too with me. Okay, let's go. 2194 is this one, right? Well, I was expecting, but it didn't happen. So what is the number to the upside, more above 21 something? 2194 is this one, right? So yeah, 2396, very good. So let's go and draw 2396, and then see what happened there. Very easy, you can find that's 20, that's too much. 2396 was, right? 2396. Okay, 2396 is right there. So we hit that, any number just above 2396. Let's go take a look. This is 2396, just above that. It's nothing here on the monthly chart. 2396 is right there, and basically there's nothing. Then you have next 2661 and 2475. Where is that? Oh, right there. Yeah, 2475 will be the next, and then 2661. Let's draw 2475. Where the heck 2475 is? 2475 is this. Now, see that I didn't draw those numbers, but now you know that if I had drawn, we would see that we went up there and we hit that number to the pip and then drop. See how easy it is? It's just a matter of paying attention, focus, and concentration on few pairs. If you're looking like I do, and then I miss so many numbers, lines, I don't draw because I'm looking 30 pairs and the commodities and indices and all of that for different people, right? Different traders. They ask me in my email that, can you do this? Can you do that? Can you show me this? So I'm constantly doing and obviously missing. But if you choose like 4 or 5 pairs, and then this is the homework that you need to do ahead of time. It's not that around the news that you start doing it. You make your 40-minute chart like that and leave these lines. One time you have to do it, not every day. Only one time. All the numbers, this, and just you're sitting there, and then you just constantly look at the number, draw the line, and write down the number so you know what is that number. 2194 is a weekly low. 2148 is just below that. Then we have this, and we went up all the way. We hit this 2475, and you have the number, Fibonacci number matches there, 1.618, right? 161%, 124.88. So how close is that? 124.88 and 124.75. Obviously, you're going to get a drop from there, right? And you know that this is a powerful big move to the upside, then you're going to fall into a correction, a nasty bad correction. So you can save yourself and not trade. But then you have the homework done, and once the wave 4 is finished, and let's say tomorrow USD is going to, the news for USD, and will come out, USD start to get weaker. You're looking at one screen or maybe the same screen you have. if you open the profile, USD profile, right? USD index and maybe four USD pairs there. Euro USD, Pound USD, USD CAD, USD Yen. That's what I have. Two goes up, two goes down, right? At the same time. So where USD, Euro USD and Pound USD, USD on the right hand side. USD CAD, USD Yen, USD on the left hand side. So those are the two pairs that may be moving. Okay, Syed, if you do not have the index, right? For example, now forget about the index then, right? But my question is that if you do what I'm showing here, only look at the Pound USD, okay? Look at the Pound USD and draw these horizontal numbers and all of that, right? So you know exactly that what is the price is doing. Look, this is the number here, something, right? What is this? Let me move this here. I can't read it. 1959. Can you tell me what is it? 1959. Where the heck I got that number from? Is it my date of birth? No, 1959 is right there, right? Well, my date of birth is very close to that. Okay, so 1959 is it's right there. It's a big number, right? Is it right? Okay, here, what is it? Low 1957. Okay, it's a clear number, right? It's no hanky panky there. So you have draw this number here, and the price was going up. Look what happened. Look it for yourself. Big numbers like that, highs and lows, they will always give you a nice trade, a nice turning point. These are very, very nice turning point. And even if this bouncing from here, what is this? 1475. Can you tell me what it is and where it is? On a monthly chart, you can see it's right there. 1475. So once you were there, you had a nice turn from there, right? And then you draw those numbers on a 40-minute chart. So, but we are not close to that. See what happened here? We came down, and from there to there, how many pip? Count. Start counting. You should be able to take those pips in your bank actually, right? Billion pips? No, man. So 24 from 1475 to 24, pretty much, right? Pretty good amount of pippage. But this is what it is. Now draw these numbers here and pay attention to what happened around the news. Now, if the news tomorrow, for example, you don't have index, you have only on one profile, you open Euro USD, Pound USD. The other side, Euro USD, Pound USD, USD CAD, USD Yen. If you don't have the index, you can have 6 charts, right? So you can add something else, maybe Aussie USD and New USD or USD franc, right? To go up or to go down. So one here, one there. It's like 3 pairs to go up, 3 pairs to go down. If my question is, you don't have index, so you're not watching the index. You have no idea what the heck is happening with the USD alone. But the news, NFP is right around the corner. And right after the news, Pound USD, Euro USD, Pound USD, Aussie USD start to go up. And USD CAD, USD Yen, USD franc start to go down. What does that mean? Can anyone tell me? Syed, what do you understand from that? What happened to USD? What happened to USD? No, it's going down, but what happened to it? Why it is going down? What kind of news we had? The news USD going down. USD is in different pairs. So if it's one pair is going down, that doesn't mean what weakness, right? And weakness will happen when? Bad news, right? So what do you need index for? It's a bad news. Now you know it's a bad news. So watch the profile. If you have a cake, you eat as a cake. You're eating a cake. Wow, that's it, right? But if you have icing, it will add a little more to it, right? Little more to it. That's it. So that's index is like icing on the cake. You still have the cake in profile. So pay attention to that. I just go by with the indexes because with the index, like, if you compare two things, one to another or another to one, right? You know what I'm saying? So I just go around it, and then we have the same result. So at the time of the news, or at the time of when the market is opening, these are two things. When the market is opening, also market is opening means our market opens up on London, Frankie Open, London Open. That's the main market open time when the volume comes in, right? And even if that sometime what happened, the market, Frankie Open, London Open, 3 o'clock Eastern time, 3 o'clock a.m. But there is no news scheduled someday, right? Sometimes Monday and Tuesday, there is no news. It's just yellow news, stupid news. Then what happens? Still, they need to make money. The big boys are hungry. So what do? They will put the money on the news of the previous day, whatever the previous day is, right? And the news, like I explained earlier, the news, very good news for pound. So the following day, even if there is no news for pound, the pound will still continue going to be strong, and those pound pairs will go up, where the pound is on the left hand side. Pound USD, pound CAD, pound is all, instead of one pair, pound is always on the left hand side. It's only euro pound where it's on the right hand side. So pound start getting strong, you will see all those pound pairs slowly going up. But you are only watching 4 pound pairs, not too many, right? And you are expert of those pairs, and you have done this homework, that these are lines, horizontal lines. This is all the levels. You already have those, just like we have here, right? And I just put this level there. When I send out the chart, this level was not there. I didn't put the level there, right? Like I said, I'm watching maybe 50 different pairs, including indices and commodities and all that. So, but you don't have to do that. You only pay attention to only maybe 3 or 4 pair. So it is very easy for you to make 40-minute chart. I don't send out the 40-minute chart usually, like, because it always goes bad. Bad means it is very fast moving, right? And in a little bit, you will see that all these numbers go this way, and the chart goes here. What happened to these numbers? Will go back, the other way. So if you do this on your own, and then what you do is, your time to time, when the price move here, those numbers. So now see, this number is going in the background. Bring it forward, move it to forward, here, so that you don't lose those numbers. It's just you have to move it to the right side all the time. Otherwise, they will see all these numbers, they are left behind. So they need to be bring forward here, because one day we will go there, right? So you have the numbers and lines are written there already. So keep moving those numbers in front of the price, so that you know where it is. So this number is, I'm missing this. This is 1475, and this is a monthly low. So I can really type right here quickly that it is a monthly low of 1475. So at least you know every given moment that what it is, what this line is what, that line is what, right? So you can and then over the time you will memorize all these numbers and these lines, like I did. And so I know what it is and where it is. These numbers, these lines, so write down this one, and then at the time of the news, you will see the prices start to move, and then we'll give you your. Now, for example, here, right? If it is bouncing from, it drops from there after a nice move, and you see the Fibonacci number, what it is from 1.618. Okay, it is gonna be bouncing. There probably a news. So right there, it's exactly at 61%. That's the key reversal level, right? So right after that, what do? You go and start watching 20-minute, and see this wobble here? That is an entry on the 20-minute chart. And then after that, it went up and it dropped, and then again, this is an entry. This is an entry. All of these are entries on a 20-minute, and you keep taking those, because you know now that it's wave 1, 2, and then you're going for this target. Now, if we can, for example, if we start to go up, this is what level is we're talking about here. We're talking about 2475. So if I'm right, and if the same thing happened, and the USD start getting weaker, and this thing start popping to the upside, what is the next number you think that is in front of you if we bypass 1475? What's the next number? Do we have it drawn here? Yes, we do. We have here 2661. What is it? I don't have written here, so I don't know what the heck is that. So we go back on a 20-minute chart and we find that this is the number. We have 2661 and 2694. So we draw those numbers and we, let's say the line is there, 2661, and it's a monthly low, right? Or a weekly low. So weekly low, for example, why should I take this one? I'll take this one. And draw this. What is it? 2661, right? So does it make any sense that if we get a good number, I mean bad number, and USD start getting weaker, then this thing can go here? Yeah, easy, right? So if we go see the projection, that would be a projection, right, to this drop here. So let's take a look at that. You measure ahead of time. This is we are doing today for tomorrow. Okay, let this thing get out of the way. So what number do you see right around here? Let's just move it here. Okay, forget about it. Now, you see this level? What number? The Fibonacci, 1.618, right? And then another thing that I'm going to mention you here is that, look, harmonic patterns. We look at the harmonic patterns and then we talk about harmonic pattern all the time. Do you see any harmonic patterns cooking here? Anybody? Joey, the master? Tell me. Cake? Come on. What is cooking here? If this is X and this is A, okay, no, forget about the numbers, man. Just look at this. This is X, this is A. Then the first pullback goes, let's say there is 88%. So we bypass 78% basically, right? So after the 78%, we drop to where? 38%? Right there, 38%, right? This drop here. So what is this recipe for? 78% and 38% goes where after that? Yeah, right? So that would be like something like this. XA, and then this is 78%, then this point C, usually around 38 or 23%, and then it goes to, it could go to 127 or 161. So what we have here, that we have a level there that 2661, and 61% is coming very close to that, but the 127% is right there. So the possibility is that if we bounce from here, this is the number here, 2396, right? So if we can stay above it, we can go hit that 2475 and then 2661, right? Make sense? Okay. Now, on a 20-minute chart, we're going to first draw and see what the heck is happening on 2396, because that's where we are right now, right? So are we going up or down? Let's go take a look on a 20-minute chart. What's the number we're going to draw? 2396. Draw that number. Do we have it here? No, we have 2358. I don't know where the heck I got that one from, but it has to be somewhere, right? So right now we're concerned about 20. What was that? I forget, man. 2396, right? Okay, so draw that. It's right there, right? So we are basically ping-ponging in between these two numbers. What is this number from? Can anybody tell me? It says 2358. 2358, where is 2358? Do we have any 2358? Maybe this low here, I'm counting. Yeah, right there, right there. It's a small number, 2358 right there. This is after this up, we made this low here and then we went up. So this one here. So this is what it is. See, this is minute number right there, and it's giving you already twice. You see this bounce and a bounce. It's acting here. So these numbers are very important. Weekly highs, weekly lows, all these lows, highs of those candles are very important. Always remember that. And then keep drawing that. See what it is. The closest number, you will find those numbers. And if the USD is coming right now, can you say that, what do you want to do? Can you go long? Can you go short? It's just wobbling here after dropping here. And even then, before that, you can see here it's up uh, and then down, then up, and then a little bit down, up, and then down. So it is not making a decision right now what the heck I'm supposed to do. So, but maybe USD weakness will come tomorrow, and then it will decide, yeah, okay, no, now I know the direction. I should be going to the upside. So what are you going to see here? You're going to see that the price will go up, and then it will give you a long entry. It will turn. The yellow will go above the black, and for example, here it will pop to the upside, will come down here, and then since it did that, and then it was all the way up, and then it's wave 4 nonsense going on right now, then it just came down here. So it becomes dangerous. Now maybe the wave 4 is finishing, and wave 5 to the upside is coming up with the help of USD weakness after NFP news. And we will anticipate that okay, when that comes, I will hit this pair. Now I did all of that mumbo jumbo, and then somebody asked me, I get the email, say, can you show me the gold chart? And I go there, right? What happened? Guess what? I forget all about it. And then now I'm thinking the levels in the gold and what happened and who is buying the gold, who is selling the gold in the market, what is happening with the oil and this and that, right? And what's happening with the Aussie dollar because it's connected to the gold. So I'm thinking all of that, and I'm off of pound USD. I don't even know what the heck is happening and what pound USD is, right? So I forget. But you guys don't have that problem. So that's why I keep saying that, then, get one or two pair, and then do your homework and draw these lines, start to finish, from weekly chart, monthly chart, take those lines, draw, and then wait for something, make a turn. After a news, the whole day the price will go in that direction, and then that whole day in that same direction you get multiple entries, you can take that. But don't try to do the same thing the next day. Wait for some kind of news or something about that pair or that currency. Now every pair has two currencies, so the most chances are that if you don't have news for pound, you will have a pound USD, and then pound USD will move anyway. But if sometimes you don't have a news for USD, but you will have a news for pound USD will move anyway. So the pairs will move, right? It's just a matter of that we do the homework and we already plan. This is what people call, plan your trade and then trade your plan. So my plan was that, okay, wave 4 is it will be dropping on wave 4, which it did, and when the wave 5 start to go up, then we will get in the wave 5, and then look at the same way, do the same homework in all the USD pairs, and you will, your eyes will be open wide. You will see some really good things. Okay, Arthur, try that, and you see it one by one. All those pair goes, and USD news coming out tomorrow, right? So all USD franc, USD yen, USD CAD to the downside, and USD euro USD pound USD and Aussie USD, and you can even look at the Aussie USD, and you will see the clear picture that, okay, this is what happened. Now maybe a lot of times that happen, that we think that, okay, with the bad news the currency should get weaker, right? But sometimes, God knows why, but with the bad news comes out, and then USD gets strong, just like today. What happened today? 10 million, the number came out that 10 million people are unemployed within 2 weeks. They filed unemployment last week and this week. It's a very bad factor, right? Something really bad, and then USD getting strong. Why? Forget about why. Just look at the chart and then follow the chart. That's all. That's all we can do. The best thing. Okay. Now let me go. Now, Joey, you're asking me that how you can see that ABC and 1, 2, 3, 4, 5 is you. This is why it's very important when you're looking at the Elliott wave. Let's go take a look at the daily chart of USD, for example. And if they're they're not all the time in the background. See, you should start. A lot of people say that you should start looking at um, the tick chart, second, sorry, a minute chart, and then take it from there. And like after that, you look at the 15-minute chart, then you look at an hour chart, and then daily chart and the weekly chart. I say I do not agree with that, and I look for first. I look at the monthly chart. That the monthly chart gives you the sense of direction, where the heck it's going and what's happening. So obviously, since there, and what is there is 2007. 2007, this pair is in the downtrend. It came down, retracement, came down, retracement, and now going down. So all in all, the pound is getting weaker compared to USD. Pound USD is in the downtrend. We know that, simple as that, right? And you see, so I made this chart that according to this chart, this is a correction, because in the background do not have more chart. I can't see it, right? So I forget about this. Is okay, no problem. But what's happening here? So if this is A, B, C, D, that could be a possibility. And then CD leg is also doing the same thing. This big version, and then it's a small version. This is A, B, C, D. AB is equal to CD. AB leg is, then after the correction, it does repeat the same thing. CD leg, simple as that, right? So according to that, it is coming down. So if it is coming down here, then we go and take a look at the weekly chart, and then try to see that, okay, forget about what we saw, that that it's coming down, but what the heck is this and this, right? So we draw the fib here, and then we see that we came and we hit the 61%, right? And then the Elliott wave count, for example, it was 1 2, and then again 1 2, and then can you see any more waves here or anything at all? For example, this is the impulse, this is a correction, right? You can see here this could be wave 1 2, and then if it is 3, then where is the 4 and 5? So it's not clear, right? So you can say that could be A, B, and C. C can have 5 small waves, maybe 1 2 and 3. If this is small wave 4 and this wave 5, that could be a possibility. Yeah. So more or less, this looks like a correction, A, B, and wave C. Now, Joey, if you remember, wave 1, 3, and 5, right? If you're talking about Elliott wave, you have to do some homework and some memorization, right? Out of 5 waves going to the upside, for example, here, where the heck can it happen? Oh, here, right? 1, 2, 3, 4, 5. So out of these 5 waves, wave 1, wave 3, and wave 5 we call impulse wave, motive waves, right? And they are fast, furious, and momentous. They will go after news. The news come out, and then they will move, right? And then once the move is finished, the main move, main impulse or motive wave is finished, you do the correction, right? Sometimes it goes too far, and then people say, no, it's too expensive now, so let's bring back the price a little bit. That is called the retracement. So wave 2 and wave 4 are the retracement. Wave 2 is a retracement of wave 1, and wave 4 is a retracement of wave 3, right? So once wave 5 is finished, which we are going to finish in right now in USD index and on a 40-minute chart, and we just saw that the wave 5 anticipating on pound USD. So after that, here comes the correction for the whole thing, right? And that would be around 61% of the whole thing. The whole thing means these 5 waves, then A, B, C correction. Now, corrective waves are 3 waves. A, B, C. Correction happens in 3 waves most of the time. A, B, C, that's it. A, B, C. Impulse wave have 5 subwaves in it. 1, 2, 3, 4, 5 here, 1, 2, 3, 4, 5 here, 1, 2, 3, 4, 5 here. Now, A, B, C, it is a correction. The whole thing is a correction, but in this correction, wave A and wave C can also be impulse wave. This is a little tricky, but this is the case. That's what it is, right? You can have this correction either 2 different ways, either 335 or 535. That is usually the case, Okay, and sometimes 3 that happens. You know, this is $1 trillion market, can do anything. But what I'm talking about, theory here, right? So most common is 335 or 535. 535 means wave A will have 5 waves and wave C will have 5 waves. So now the reason I'll explain that, all of that, but if you can see like wave 1, 2, 3, 4, 5, then you have to understand that this could be wave 1 or A, and it depends on what happened in the background, right? If the background, you see that it was a drop and it was an impulse drop, now the correction is coming, A, B, C, and out of that, A, even though it has 5 waves, it could be wave 1, but since you see in the background that you drop as an impulse wave, right? Big one. For example, we go 40-minute chart here. You think that going up from 2 to 3, is this the correction? No, obviously not, right? It's a powerful move, fast, furious, and momentous. So it can never be a correction move, and it is you do the calculation, it is 1.618 of wave this and this. So this is confirmed that this is wave 1, this is wave 2, and this is wave 3. Then after that, what comes? Wave 4. Now you cannot say that we're going to have wave 1. Yes, it can. This market can do anything, right? Unless we see something like big drop like this, then we can say, yeah, okay, it's not wave 4, it is making a turn and now it is dropping as an impulse wave. But is that the case there? It is the characteristic of wave, impulse wave? No, obviously not. This is clearly sideways correction, right? So it is confirmed now that it's wave 4. So if you have wave 1, you have wave 2, you have wave 3, you have wave 4, what would come? Wave B? No, it is 5 wave complex, not complex. There are 5 waves, impulse wave going up there. So it's 1, 2, 3, 4 followed by wave 5. Simple as that, right? So the style of the wave, the calculation and the background tells you if it is the correction or impulse. But knowing and remembering and memorizing those numbers, that like this is what it is, with whatever it is. That's why you see I have written here now A, B. Why? Because it's confirmed, right? But you just saw that I'm in case of 40-minute chart of USD index, right? I have that we're gonna go up for wave 4 or A or 1, right? Or we came down, then I wrote down there that it could be 3/C, because it's not confirmed. It could be 3 or C. What will confirm it? The next move, right? If the next move is powerful impulse, that means that was before the wave before that was the correction, finish, wave C, and now we have an impulse wave. But that's not the case there. The case is that we are going in the USDX I'm talking about. We are going up very slowly and very corrective wave, very common correction, ABC fashion, right? We're going up, and it is confirmed now that that's wave 4, and then wave before that is confirmed now. I can erase slash and C from there because that is confirmed that it is wave C. So if you are following up here something, right, and you're listening, Joey, or you are sleeping, and everybody else, right? Sometimes it gets boring, and that's why people run away from Elliott wave. Why? If you're sleeping, how the hell are you writing? You're typing. Okay, so you're not sleeping. I know that. Or you have a genie who can type for you, right? All right. So now, what I'm doing, what I'm saying is that now you are tracking this thing, right, on a 40-minute chart. So if you're tracking and then weekly chart is there to back you up, then you don't have to do it again and again and again. Here, tomorrow you can never come back and say that, oh, no, this is wave A and this is wave B. No, this is done. This is wave A, B, C, 1, 2, 3, and wave 4. So it's there, right? Now you have to just take it to further into the next day and into the next day and into the next day. And if you keep doing that and not forget about it, then you would have no problem for the next wave coming in. The problem comes where we start looking too many things and then forget we have done, what kind of work we have done on the pound USD on a 40-minute chart. We go and look at that, maybe copper or silver or soya bean, right? Or oil and gold and this and that. And then you will obviously forget all about it, pound USD. And then wave count and everything. Then what kind of homework you did before. But if you have 4 or 5 pairs maximum, and then you keep looking at that, and you know exactly that, I remember that I made the chart, I gave it to you guys, and this is what the wave 3 was. If you forgot, let me show it to you, that this was the chart I gave you. And I think it is on the desktop, on my desktop, in the before chart. Right. So one of the pound USD before, look, this is the chart I gave you, right? So I knew that this is wave 1, 2, and by measuring 1.618 touching here, and we just saw that we have a very powerful number here as well, 2475, that is, right? And we just marked there. So if everything is there, which is pointing towards wave 3, that's why I said this is wave 1, 2, and wave 3 of wave C. This is A, B, and C correction is coming up, right? And then we're going to drop eventually. But the thing is, right now, that's what is cooking. So we have to follow that. A lot of people say there's A, B, C. Okay, so somewhere there is going to drop and they'll short and then continue shorting while it's going to the upside. So on a daily basis, somebody just asked me that I don't make a long-term. Long-term, the problem with the long-term is, I don't know where that question come from. I think, Ted, is that you? Ask me. Somebody asked me that if I made the strategy. This is my weekly and my monthly chart are the long term. That was John. Okay, John. Right. So these are my long term strategies, and well, that's not a strategy. That's the chart. So all you gotta do is that if I tell you that I made this pound USD, where the heck it is, pound USD monthly chart here, like in February 2018. And then pointing towards here. That is a long-term trading. But at the meantime, you went up thousands of pips and then come down thousands of pips. And then what about when you are going up? You are, you are short from here. Okay, you're not negative, but you made 2,000 pips, but then here goes 1,200 pip back into the market. Now you are sitting on only 500 pip. So rather, why not just go day by day and squeeze the damn thing? You can squeeze sometimes. I have done it. I have done a pound news recently. There was first entry 290, and then the second trade was 150, right? And the whole the pair moved only 500 pip that day. You see, so what happened is that after 290, I closed on the top. It retraced back 100, 150 pip. And then from bottom, I got in again, and then it squeezed 150 more. That's what you do on a daily basis. So it's much, 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 much more profitable. Yes, it is more work, everyday work, all of that. But that's the style that I chose, and so far it's working for me. But the thing is, yeah, long term, you can look at the daily chart and then you put your short and long. And so a lot of times, what happened? On a daily chart you see, yeah, okay, it's gonna drop from here to here. That's 800 pip. Okay, that's fine. So I'm gonna do that. But it drops here, and then it 300 pip, you're in profit, and then it retraces almost like 78%. So now you are maybe 50 pip in profit. What happened to 400 pip? Why if you had taken the profit there and then waited for the retracement and then short the damn thing again from the top, and then squeeze again 300 pip. So the whole move will be 600 pip, and you will make 700 pip out of that. Right? That is the beauty. And so that's why paying attention to the daily range and looking at the looking around in the world, into the world, and then fundies, what's happening, and on a daily range squeeze. Now I learned myself, at least I can say about myself, that every day the same story happens. When people go to sleep, come back, like every day same cycle. Our cycle is what? we get so tired that we need to recharge our batteries. So God made night for us. Go home, sleep, and then charge your battery, right? Your phone, cell phone, right? Cell phone is what? You use all day long, the battery goes down, then you put it on the charge for a couple of hours, right? That is the night for the cell phone. It's sleeping, recharging. We do the same thing. But when we come back to the office, our offices, and do what? Anything different? We play football or baseball or soccer there? No, we do trading again. So it's the same thing. If a trader on Wall Street, right, he go home, then he comes back the next day, he does what? Trading again, right? The same thing happen again and again and again and again. We repeat the cycle. Similarly, this market repeats the cycle every day. Every day, Frankie London volume comes in, you gotta move. People need to make money, so the price will move. You move with them, and then close your shop and go and rest. So let your trades also rest. Close the trade, let them rest, right? Let your account rest, right? There would be a resting time for your account. Don't trade anything, don't leave any trades, and then go back home to sleep while your account is sleeping as well. And then the next day comes, everything is new, but the same story you're going to repeat. You're going to see the London session, you do your homework. Here comes the London session, here comes the volume, and the same old game starts again and again and again. So that's why I prefer that. So here, the key is that this is my long-term, charts, my long-term strategy. That's what it is. Now let me go to another question here. So Joey, you understand what the ABC and 1, 2, 3, 4, 5? If you still have a problem, then I'll get you separate on Skype one day and then explain you again one more time. Okay. Okay. All right, John. Long-term strategy. I answered that, and I have another. Okay, Ted. Well, Ted left here, and is it Ted came back or no? Oh, you here, right? So your question was, let me read. Okay, now it's a daily range. Any pair. Sometimes what happens is that when the Frankie and London session comes, the only reason that will fulfill the daily range. Day starts at 5 o'clock. Some pair, right? London session, and then some brokers' day starts at 12 midnight, right? And right after that, Eastern time I'm talking about. So 12 midnight Eastern day starts, and then here comes after 3 hours, the London opens. So in 3 hours you cannot finish the daily range, definitely not. But some of those brokers, for example, there's a lot of them out there that starts the day at 5 p.m., right? And then 5 p.m. start the Tokyo session, Eastern time I'm talking about. So the Tokyo session, sometimes news are scheduled there for Aussie or Yen or Nuzi, right? These are three Asian currency we are dealing with. So if you have, like the other day, Nuzi news came out and the pairs start to jump, right? So yes, the pairs start to jump, and then what happens is that if the daily range, you have to look at the conditions for that, Ted, because nowadays, for example, the daily range, if you look at the Newsy pair, pound Newsy, I was looking at the daily range showing nowadays is 260 something, right? Let's say 260 pip. But the other day it posted 500 pip, double of that, right? So we are going through unusual time, but let's say we don't have the unusual time, and we have we are moving usually the way we move, and the daily range. So the daily range of it's not going to be finishing on Euro USD by the Frankie. Okay, yeah, let's clear that. The Euro USD, Pound USD, no. The daily range will finish because of the pair has moved. And which pair will move in Asian session when the market opens up? Aussie Yen, Euro Aussie, Pound Aussie, right, involving Aussie or yen or NUSI, pound NUSI, they might move, and then they finish the daily range around there. So now you have to see that if it is going for example, pound NUSI, right? NUSI bad news came out, it went flying to the upside, and maybe right around before the London session, it already went up all the way 400 pip daily range finish. But the NUSI part is finished, not the pound part, right? So down the road, in a couple of hours, you have London Open. And the London Open, right after that, 2 hours into London Open, you have pound news. And the pound news comes out very bad. What's going to happen? NUSI has done its part in the Asian session. NUSI got weaker and it took the pair all the way to the upside. The daily range is still finished. But here comes the pound session, London session, and the pound bad news. So the NUSI effect is gone. Now the pound effect will go in effect and will do what? It will bring the pair down. Daily range was finished, the news comes in, and that pair goes down. If the daily range of a pair is finished before London and there is no other news, leave it alone. Don't go against the daily range, because it may not move or may drop, right? If it has gone to the upside, it may drop, it may retrace. If let's say if the pair goes and finish the daily range of 200 in straight up move, then obviously there is no news, the daily range is finished, then it will retrace. Even if it's a London session, it will retrace, right? So you have to see that why the pair move, which pair move, all different. And then like I said, the most probable movement will happen in pound, Aussie yen, Euro Aussie, pound Aussie, right? These pairs, and Aussie USD, right? So the Aussie dollar and yen and NUSI, these are the three currencies will move in Asian session. So if the daily range is finished, it doesn't mean that it will not move. It will move maybe in the opposite direction because of the other currency news. Okay, I hope I answered the question. Arthur, what's up? You asking me where to a good place to find a daily range? I gave you the indicator, bro. Here, let me show you. You see this indicator panel? You should have it. I gave you in the package. This is the indicator here. You simply drop it and it tells you what the daily range is. Okay, you see that? Average 60-day range, 158. It's in your package. It's in your package. And the indicator. If you have put all the indicators in the indicator folder, so it's there. Just look at it right now. This yellow sign, right? This yellow button, and then look for this range trader. If you don't have it, somehow you missed. And look into the my email that I sent you. And then if you still don't have it, then tell me, I'll send it to you again. But this indicator is tell you average 60-day range is 158. Previous day range, it did what? 124. And currently, right after 5 o'clock, it is current day range is 7. So I see the day started at 5. My day is with this broker day started and then at 7. So now it's only moved 7 pip. So average is 158. So pound USD probably will move that much into like tonight and then tomorrow NFP and all of that. So if let's say wherever it is, if we go to the upside for 158 pip, this is part, okay. All right, from here, 160 pip, right? So we are at, let's say 124. So 150 pip, 160 pip is going to add 160 pip. What happened? From 120, right now is 124. So 125.60, right? And then this area is 126.61. And then 125.48 is 127%. This is very close. And then you have R3 right there for the daily range. I mean the daily paper, right? So all of these things are pointing that, yeah, it's probably going to be bouncing from there and then go to the upside here. I was expecting that it may today and tonight probably, and still we still have a chance that maybe tonight in London Open, the pound will have probably bad news or bad, or whatever that will bring us down here, right? And then here comes the NFP, then goes up again. That's what happened all the time. The pair, you see that this went up and then again down. Well, if something is good, then it should go up and up and up and up, right? No, if this pair involved two pairs, two currencies, pound and USD, it went up because maybe pound is strength or USD weakness. Then again, something happened. Maybe pound got, sorry, I said it wrong. It went up because pound is strength or USD weakness. Hit the level, everybody closed their trade, fine. But then again, what happened? Either pound weakness and USD strength, it comes down. Then comes here at the 61%, something happened, and what happened? Maybe pound strength and USD weakness again. So I made my chart for the USD that is going to drop. It's still coming down perfectly fine. The weekly chart, the monthly chart, remember? I gave you guys that, from all the way top, 127 is going to drop to 0698. So it is coming down there. And because of that, this all happened. All the pairs. I'm just showing you one pair, but all the pairs, the same thing happens. Okay. So all in all. So now it's whoa, it's hour and a half already, right? So I'm gonna close it now because the problem here comes the recording gets messed up, right? So if you guys want, let me know. Send me an email who wants to have a webinar tomorrow as well. Okay, because really I'm staying home and I'm bored. Okay, so I want to do what I can do. So I can just talk, and you guys teach you guys. That's all, right? So send me an email. If I have more than 10 emails, I'll set up 10, 20 emails, and I'll set up the webinar for tomorrow too, right? And then we're gonna talk about some harmonic patterns there, just like I said, here's something, a butterfly kind of pattern, right? Cooking, and so it's a lot of different patterns all over the place. If you learn, you can start seeing them very quickly, very easily, right? So yeah, so give me a green light for tomorrow, then we will talk tomorrow as well. Okay, and there are some questions left over. Doesn't matter, tomorrow, tell me tomorrow, then I'll explain, right? Questions never end, remember? So it doesn't matter. If I didn't answer your question today, you can ask me tomorrow. You can even send me an email if you cannot attend that webinar. Just send me an email and I'll write it down and then mention it in my webinar tomorrow. Okay? All right. So bye for now and talk to you guys later.